Hi everyone, Josh Gilbert here and welcome to Stock Break, where I give an in-depth analysis on public companies in under 5 minutes, breaking down their fundamentals and potential valuation. So let's dive in. Hello everyone and welcome back to another episode of Stock Break with me, Josh Gilbert. And today we're going to be diving into Coca-Cola. It is the beverage company behind what is arguably one of the world's most recognizable brands. And today we're going to dive into Coke's business model. We'll take a look at its financial performance. We'll explore its competitive landscape. And we'll finish up with a quick look at its valuation in all about 5 minutes. By the end, we'll hopefully give you a clearer view of what makes Coca-Cola tick and why it might just be a stock to watch amid the tariff tantrums. And if you're not already, make sure you hit subscribe to get all the latest episodes from Digest and Invest. And a quick reminder before we get started that this presentation is for educational purposes only. It should not be taken as investment advice or a recommendation to buy or sell any financial instruments. So with that done, let's get into it. Look, we all know Coke for its classy fizzy drinks, but look, we got to go back to 1886 from when we basically saw, it sort of first start. That was when the first glass of Coca-Cola was first ever, poured. Move on to today, and 2.2 billion servings are enjoyed in more than 200 countries every single day. And that's pretty key, right? 200 countries, but the business does go far deeper than that. 200 brands in its portfolio, which spans across soft drinks. It goes across juices, it goes across water, it goes across teas, sports drinks, and even coffee as well. So these are some of the most recognizable brands, right? Think Coca-Cola, Diet Coke, Fanta, Sprite, but also names like Powerade, Minute Maid, Costa Coffee as well, massive over in the UK. And then we've also, got sort of innocent smoothies and things like that as well. Look, this is a brand that has adapted over time. Nearly half of its volume now comes from low or no sugar drinks. We'll get onto that a little bit in a moment. In terms of that global reach as well, Coca-Cola operates in every country except from North Korea and Cuba. Emerging markets like Latin America and Asia, they're driving much of its future growth. And what's really important here is that about 94% of the world's population will be able to identify Coca-Cola's logo. That just goes to show the huge brand strength that Coca-Cola has. It holds about 40% of the global non-alcoholic ready-to-drink market, which makes it quite clearly the category leader. Look, the business model is actually pretty asset light. So what you may not know is that Coca-Cola doesn't actually own most of its factories or trucks that sort of make and deliver your favorite drinks. It sells syrup and concentrates to bottling partners who do manufacturing and distribution. So, for example, the Coca-Cola that we know in the US, for example, is different to the Coca-Cola that we may have here in Australia. So, you also may know as Coca-Cola Amtel, for example. So, different business models. So, this structure sort of means that Coke focus on, brand building, marketing, and innovation, and it also keeps those margins relatively high. One of the biggest owners of or one of the biggest advocates, I should say, Warren Buffett. He's owned the stock since 1988, and it still makes up just over 10% of Berkshire Hathaway's portfolio. And he's famously stated that when we own portions of outstanding businesses with outstanding managements, our favorite holding period is forever. And I think that is applied to Coca-Cola, right? He sort of applied that to Coca-Cola. He indicated his long-term investment strategy and belief in what's ahead for the business. And as I say, held it for many, many years. From a competition perspective, of course, it's PepsiCo. Unlike Pepsi, though, Coke is purely focused on beverages. Pepsi is now into sort of large snack businesses as well. We also do have, regional players. You do have other smaller names that can sort of chip away at market share, but no one can get close to Coke's sort of global scale, distribution power, or brand recognition. Look, going back to some numbers now, in its Q4 earnings in February, earnings and revenue topped expectations as global demand for its drinks continued. Net sales rose 6% to USD 11.5 billion. And as I said earlier, Coke's zero sugars volume climbed 13%. So again, strong growth there, and that may continue. For the full year, earnings rose about 7%. So just on the screen, again, if you're listening on the podcast, head over to YouTube to have a look at what I'm showing. But basically, we're looking at its strong dividends. Coke is very well known for strong dividends. It's known as a dividend king. It's increased its payout now for more than 60 years, and it currently yields just around about 3%, which is pretty attractive in a volatile market. But the chart I'm showing on the screen is basically the dividend yield continuing to grow throughout its history, continues to go up. So dividends per share growing every single year. I mentioned there about that sort of zero sugar for Coke. It's expanding its footprint into sort of those health conscious categories. About 60% of its portfolio is now low or no calories. So again, very, very important there. From a risk perspective, what are we looking at? We're looking at sustained volume growth. That is needed for long-term success, especially in developed markets where carbonated drink demand is declining. Coca-Cola is sort of less exposed from a tariff perspective, but a broader trade war could disrupt supply chains or consumer spending. But we're also looking at aluminium imports to the US that could raise packaging costs for cans, and again, they could maybe offset that through bottles, but again, still something that may be a bit of a headwind for the business. Now we just have a quick look at how the stock's performing. Over the last 12 months, Coke shares are up about 20%, well outperforming the S&P 500 in that same time. Shares currently trade at about 24 times forward earnings. That represents what I would say consistency, brand strength, pricing power. And I think for long-term investors, Coke is often seen as this defensive play, and it may not offer rapid growth, but it does offer resilience, cash flow, and dependable income. A quick look now to the valuation perspective. Again, as we were sort of saying earlier, Guru Focus ranks that as about fairly valued, and I think that's fair, given its return an average of just over 9% for the last 10 years. We're not going to get anything too crazy from Coke here, but looking at Bloomberg's analyst recommendations, 29 buy ratings, 2 holds and 1 sell, showing that sort of ongoing confidence in the stock. As I said, look, Coca-Cola, it isn't a tech rocket, but it's a globally recognized brand. It's a billion-dollar brand. It's got resilient margins. It's got a great dividend, and volume growth will continue. We're going to see Coke around for many, many years to come, and that all makes it a bit of a safe haven amid what is tariff chaos. Thanks for tuning in to this episode of Stock Break. Let me know in the comments what you think of Coca-Cola's long-term outlook, and if it is a stock that you have in your portfolio. And to stay updated with all things investing, make sure you follow us on all podcast platforms. Just search for Digest and Invest.